Hey everyone, and welcome back to the channel. Today we're going to discuss the Awesome Oscillator. It's a great indicator for crypto, and if you're looking for a little something to add to your trading strategy, this is the right place to be. So the Awesome Oscillator is a momentum indicator, and it's based off of a really simple idea. It's comparing the number 5 moving average with the 34 moving average. And the difference between those two are what makes the indicator work. So it's based on a very simple idea of crossing the 5 moving average with the 34. So that means that the first moving average will take into account the 5 last candles of the chart, and the other one will be a bit longer and react slower. So now that you know a bit more about how the indicator is made, let's go to the charts and I'll show you how to use it for your crypto strategy. All right, and now we're on the charts for Ethereum in the 1 minute. So this is really for scalping, but this works with basically any time frame you want. So here I already set up my Awesome Oscillator. For those who want to find it, you just go into your indicators, type Awesome Oscillator, and you'll find it here. You can add it to your favorites. Once this is done, and you can see it looks a bit like the MACD, but the difference is that the movements are not as smooth. It's really sticking to the market much more. And that's because it's taking into account the simple moving averages that are just going faster than the MACD. There's two different informations in this. So you see the histograms here that are either red or green, and the red ones are bearish, the green ones are bullish as always, but in and on themselves they don't mean a lot. What is important is this middle line that you can see here at 0. There's some values on the side. It goes from 20 to 0 to I think minus 20 or minus 30, and this is what is the most important for the Awesome Oscillator. And you have this line in the middle that's the most important. It means that the price is neutral, and above this it goes bullish, and under it it goes bearish. So essentially what people would do to use this strategy is whenever there's a cross above this, they will go long, and when there's a cross below this, they would go short. So sometimes it works pretty well. For example, here you see there's a cross, but it's actually a bit late and you would get lost. But when it crosses again here, we could definitely take a short here with the stop loss somewhere here, and then we get the two risk to reward, which is not bad. But the thing is that if you do this, as always for this type of oscillators, they work with very well when there's a trending market, but as soon as it gets choppy, for instance around here, then you just try and go get it, but it's just you're just gonna get stopped out a lot. So when the market is neutral, it's better to avoid using this. And for example here, when there's not a lot of volume, you see also the histograms are bigger when there's more volume. So when they're just wiggling around the line, then it's really not a good idea to do that. And now let's try to implement a more advanced strategy, which is divergences. So a bit like RSI, you can find divergences in the price with this tool. So let's try to identify here. There's a low here and then a lower low here, but on the oscillator you can see that it's actually going up. So this one is higher than this one, and then it's the opposite on the oscillator. And what this means is that the oscillator is showing that this trend is currently getting weaker, and there's a chance that it will reverse. When you see a divergence like this, it means that there will be probably something happening in the price that will just reverse the trend. And so when you see there's a divergence like this, it means that the price is very likely to reverse. However, it's not always the case, because sometimes the oscillators do a lot of divergences and the market keeps going lower and lower. But it's one of the signs that can tell you, okay, there's something going on. And then if you have other confluences, for instance, a super trend indicator or the RSI that's also showing there's a divergence, then it's probably a good idea to look for buy or sell according to the divergence type. And now we see, obviously, this is a bullish divergence, because here the trend seems to be going higher. If there would be a higher low, then that's bullish. And then we go for long because of that. So we see here the divergence starts to be confirmed, and we can just like try to target, for example, this little high here, and we would get it eventually. So this is the type of strategy you can use. But of course, it works better if you pair this with some support and resistance. So let's go back in time for this example. If we go back in time, let's go on the 15 minutes. That's what I usually draw my supports from when I'm doing market analysis. For the 1 minute, I like to get a bit of a higher time frame to do the things. So there would be a support here, maybe one here or here. Well, let's just put one here. And then we can see here there's not much more going on. So we'll have to go a bit further to look. Even maybe, yeah, okay, here looks like a pretty decent support. And we see now that means that we're on this support. If we go a bit further, we see that this support is broken. So we'll need to look for maybe another support. Yeah, we definitely need another support here. After this one, we can see that this has been also a whole area of support, basically. Like there's this whole week that can be considered a support area. So let's go with that. And now if we go back to the 1 minute, let's see what happens. So we are in that support zone, and now we get this divergence. So we just wait for the little signal here. We see that, okay, now the oscillator is getting back to bullish and it's going to cross the line. So that's the indication that we are now able to enter the trade if we do a bit more safe and we wait for it. So then we just target the 2-to-1 risk to reward like this. And then we will get it. So that was an example of a buy. Now let's try to go back in time and find more examples with support and resistances. So for example, here I found another pretty good setup for a trade. We see that we've been bouncing around these two supports. I drew this from the 15-minute time frame. And here we have a first low and then a lower low on the price. But as we can see, the Awesome Oscillator is doing the opposite. Now this low is actually a bit higher than this one. So this is also a divergence, because we see the line is going down and the line is going up here. And with this, we can also see that there is a support here that I drew on the 15. And we break it, but then very quickly we come back up. So that wick means that there was a lot of buying pressure there. Everyone just jumped in and bought the support basically. So with these three elements, we can pretty confidently take a trade. So we just put the stop loss below that wick because the liquidity has already been grabbed. And we just target the next resistance here. So that's a nice 2 risk to reward ratio. And it happens to be a loser here. We just get wicked out before the price actually does go up. But that's okay, because then we would probably get this other setup here, which is also a divergence. So for instance here, this one is a bit lower and this one is higher. And as you can see, these two trend lines are going into different directions. This one is going up while this one is going down. That and the fact that we actually do a fake out and we go back to the support, this is a pretty good setup. And when here we both cross the support and the 0 line, it's a pretty safe entry for this strategy. So we just target maybe this low, because I think there's not a lot of space before the next resistance. So let's not be too greedy, because if we just put it here, then we have a pretty bad risk to reward ratio. So I don't like that. I'll just take this low instead. And we've already done this fake out. And if we're to continue going down, then there's no point. It's not going to make a difference. We're going to get stopped out anyways. And we do get it eventually. We end up getting a pretty nice trade right here. And you can essentially do this for the rest of the trades as well. Here we have an example actually of a bearish divergence. Here this is like equal highs, but we can see clearly that the oscillator is getting lower low here, lower high here. So this is a sign that the market is just respecting that resistance and is probably going to bounce down again, which it does. And now this is also a pretty good example to use this in this kind of environment where the market is ranging between two little support and resistances. As you can see, like there's not really a clear trend here. And in this type of setup, it's very nice to just use reversal patterns like this oscillator divergences, because then you just have higher chance that it will stay in the range, and you can basically identify the moments where it's just gonna reverse and go to the other end of the range. This is something very common. And then when it breaks this range, it's okay, we just go back to the 15 minutes and we find another support. So here we just can say that this will be a support, at least for now. And then we just go back to the 1 minute and we wait for another divergence. So yeah, this is the one I showed previously, and as you can see, it works pretty well. And we just target that other resistance here. All right, so that's it for today's video about the Awesome Oscillator. So let me know in the comments if you've tried to use it. If you have any questions, please comment down below. I'll be sure to answer everyone. And if you liked this video, please leave a like and subscribe to the channel. I'll see you in the next one.